come on, guys. Another show, another episode, and another very special guest. So, as you see here in front of us today, we have Garth Schultheis. He's a real estate broker with EXP Realtor and been an agent since 1997. So, for you who didn't had enough time to do the math, that's 23 years. Very long time. Garth started in real estate investing in 1989, and that's 30 years. And I know that because I born the same year. So with his brother, while he was still in college back in Indiana, Garth and his brother moved to Colorado in 1992. Garth has bought and sold several apartment complexes from Cheyenne to Albuquerque, commercial buildings, fix and flips, and development projects. After going bankrupt from 2009 real estate crash, so maybe we can talk, a little bit about that as well. How did you came through, being in a position that you are currently right now? Garth has rebuilt his real estate portfolio with a singular focus on multifamily income producing assets, not anything speculative going forward. So in the 5 years, he has successfully acquired 209 units and have 27 units under contract. He's building basically his business and just helping, a lot of people to create wealth along the way. So super impressive bio, and I'm just very excited to have you today on, Garth. I really appreciate it. Thanks.
I'm excited to be on here, Martinez. Appreciate the invitation.
Thank you. Thank you. So again, first of all, because I told you before the interview, I love the stories. So maybe you can share your own story, again, having this impressive bio going all the way back to 30 years and plus. Can you share people, how do you even discover like this real estate space? How do you
Well, I blame my brother. I got an older brother who's 10 years older than me. Okay. And so when I was, in 1989, I was 20 years old and, had no clue with what I wanted to do, wanted to be successful like everybody. Mm-hmm. And my brother, he's got a whole nother story, but, he was dyslexic before they knew what dyslexia was. And so he was told he was dumb and you better get used to working with your hands. So he had been in construction, but then he had figured out along the way that he had this thing called dyslexia, and actually he wasn't dumb. And then he started reading these books, so back in the 80s, I think it was, I'll think of his name here, Robert Allen. I think he's still around. He's an old guy. And he used to sell these books. It was, the titles would be like "No Money Down Deals," how to buy real estate with no money down. Mm-hmm. And so my brother was starting to read those, and he was just trying to figure out what career path he should take. And he basically said, "Hey man, we ought to do this together." He had a vision for like, let's do some things together as a family and stuff. He did, I didn't understand quite what he was saying back then, but I understand a lot more now. And I'm excited just about bringing in my own kids and, building like real wealth, call it like legacy wealth. Yeah. And not just for selfish reasons, but, what could you do? Like I was just at this meeting down in Mexico, and there's a lady who she made $6.5 million last year, and she gave away $650,000. Mm-hmm. I think I'm doing pretty good. I bring in passive income about 20 grand a month. But wrap your head around like she made 3 times, or what she gave away is 3 times what I make, And I think, wow, that's pretty cool when you can have that kind of influence and call it power or authority, mm-hmm. and use it to push things the right way where we want them to go, right? Anyways, so it's kind of interesting. And if anything out of this podcast, I'd like to bring people's mind to just think bigger. People have done that for me, and it's very powerful. Anyways, so my brother, he said, well, why don't we do this real estate thing? And I was like, I'll just go get a job. All my other friends just went to the corporate world, got their jobs and stuff. So when I graduated in 91, I just said, well, let's go for it. And, so it was a pay cut, I just moved in with him and his wife and their newborn baby. And so it was just kind of a room and board kind of situation. But, it was the best thing I did as far as, looking back. I got, hands-on, he bought a 29 unit apartment complex, first one. He actually bought a couple duplexes, realized you can't make a living on, a duplex. So you gotta have the economy of scale of a larger complex is able to put this deal together. But even then, it was like we had to do all the work, right? We had to do the plumbing and electrical and remodeling and cleaning to make it work. But it was good to know from the ground. I know what it takes to run an apartment complex from the ground up. Anyway, so that's kind of how I got into it. And then, my brother and I went on a ski trip to Jackson Hole in 1991, 92. And we were like, man, this is a beautiful place to live. Wouldn't it be cool to live in a mountain town like this out in the West? We're from Midwest Indiana, you know, cornfields, flat, no mountains. And then we just had an epiphany where it was like, you know what, if we're going to do this, now's the time. Let's not get rooted with families and kids and stuff like that. So we did it in less than a year. He actually moved to the Front Range of Colorado, and we bought a 42 unit apartment complex, and we were very successful with that. We bought it for 1.1 million, ended up selling it for 1.8 million. But I will note that some of my worst mistakes in real estate is selling. We should never have sold that. It's probably worth 3 times the amount of what we sold it for now, 20 years later. But it wasn't even so much about what you sell things for, because it's more about the passive income that we gave up. Because if you ever come across passive income, and then don't be so quick to sell it or get rid of it thinking you can just easily replace that. Because we got lucky, to be honest. We were young and dumb, and other people had been burned from the changes in the laws in '86. But we didn't know anything about that, and we were able to buy when everybody else was scared to buy. And so for a few years there, we were young, and we were able to put deals together and spend 6 months doing it, where normally, in a hot market, you got to get something closed in 60 to 90 days, have a lot of the money all situated beforehand. But we didn't, but we got lucky on that. We learned, we kind of cut our teeth on those deals. Bought some stuff in Cheyenne, learned some things, buying outside of my area of expertise or my market, because that was during the Bill Clinton years, and he was shutting down a lot of military bases, which I think is fine, except that we were relying on the military. There was a big part of our rental pool. So it changed our plans, and we had to kind of readjust, and it wasn't as good of a project as we were hoping. And then same in, Albuquerque, I bought 50 units down there, and that was a learning experience, when I was a younger man, that, you got to know what the rental laws are there. It'd be like me trying to buy something in the UK. You need somebody on the ground that has expertise in the rental laws and real estate and so on and so forth. But in the US, where I am in Southwest Colorado, I'm not saying this pridefully. It's just because I've been here 25 years. I'm an expert of my local market, and so I'm confident in what I'm doing here with the 209 units that we've purchased and the 27 we have under contract. And I'm actively looking to expand that and build the syndication. But that's kind of how I got into it. I skipped over the whole crash of 2008, 2009. But I could simply say the mistake I made, and when you're in a booming market, and you and I, before we started recording, we were talking about real estate sales versus real estate other services, and how it's very different. Being a real estate agent, which I am, and being an investor is not even close to the same thing. But a lot of people do the same thing, and for me, it's been a huge benefit to be that. But during the booming years, people mistake being able to flip a property and make money as an investment. That is not an investment. That's called, you may make money, and I made a lot of money doing that. And then I lost almost all my money doing that because of speculation. So that's the one thing to overcome those years of loss and bankruptcy is, I was scared to get back into the game, but I realized, hey, I think I know what I'm doing. And I took 5 years off of doing that, and I really did some self-evaluation, and I realized my mistake was not even the developments that I invested in. Those were good investments. It was the banks. So the banks were the biggest issue because, I had done a lot of flips. And me and my partner, we had pooled all our money together over the years. And I had personally gotten out of, my brother never did, but I had gotten out of rentals in multifamily apartments because it was hard to buy cash flowing property. So I allowed myself to get pushed and buy into speculation where I'm like, we can buy this, it's a break even, we'll turn around, condominiumize it and sell it. And had very many successes that way. And then I was going to do my last two big deals, make 7 million, and then go buy some apartments, some more apartments. And then the crash happened, the bank collapsed, stopped sending us money, but we still owe the money. So we needed the construction money to continue to build to make the money, right? So, and I watched my brother in that same time frame, and they had a little hiccup, but people still rented, and actually more people started renting as they lost their houses. I mean, I'm assuming you're familiar with what happened here in the U.S. It was quite dramatic and the biggest downturn I've ever experienced, and learned a lot, and very painful. And so going forward, I'm very, adamant about not getting into development for me personally. So Martinez, if you see me even talking about getting into a development, just come over and slap me.
We're gonna finish right there. We're gonna that's it. I have to go now. Click, gone.
Yeah.
It's definitely, because I see, I've been involved into real estate, some time as well, and what happens in a downturn, the construction businesses suffer the most. It's like the first businesses, you might have a fix and flip, wholesaling, Airbnb rentals, hotels, multifamily. The construction always will suffer first.
Yeah.
So, yeah, definitely. Again, it's a learning curve most of the time. Sometimes we have to pay that price, which is the ultimate price of being in a position that you've been, before. But look, I'm going to mention the name, Donald Trump, like him or love him, but this guy went bankrupt, and you probably know the story, multiple, people who real estate, they know the story. He went bankrupt minus $1 billion or something. I don't know. And he came out at the other end, plus having now plus 3-4 billion. I don't know. So it's also the mindset. Look, it's a learning curve. You learn this stuff, and it's not the first. You're not the first who lost money, in a downturn. Everybody suffered. So, but that's the way it is. And sometimes it's no fun. But hey, so for the people who are watching this interview and thinking, again, having 30 plus years of experience in real estate, everybody's eager to be in real estate now, because it's particularly multifamily. It's kind of a popular now, trendy thing. I see a lot of people becoming syndicators, and again, where we are in the market, it makes sense. Again, you have to be very careful, and partnering with the right people. Again, if we can talk about that a little bit later, but maybe one thing for people to take away, if they're looking to get involved into real estate, where should they start? Because I thought you're going to mention one thing. I thought you're going to mention the book, because most of the time when I talk with real estate people, they're mentioning this one book, which is Rich Dad Poor Dad. But you're mentioning your brother. So maybe your brother read the book and then you got involved. I don't know.
Well, if you ask me what books to read, I would say Rich Dad. I mean, it depends on where you are and your real estate knowledge. But if you don't know anything, let's say you're in a 9-to-5 job and you're like, man, and this is a problem with real estate agents, because, in real estate, typically, or any commission-based business, well, it's 100% commission-based for real estate agents, for most real estate agents. And so you spend those first couple of years building your business and scratching and clawing, and not making any money, so you don't really pay much taxes. But then all of a sudden, it's you'll get traction, and then you go from making 40, 50 grand a year to now you're making 150, 350,000, and then now all of a sudden you have a tax issue. And so, and then you realize, I'll just speak for myself. So then it was like, oh crap, I didn't realize I got to pay up to 50% tax. And I knew that, but didn't plan for it. And so by the time you start to figure, all that out, it's 5 years, 10 years. And then next thing you know, you're 40, 50 years old. And just 99% of agents, if you ask them, you say, well, when do you plan on retiring? They'll say, oh yeah, 3 to 5 years, and then if you ask them in 3 to 5 years, they'll say the same thing.
Yeah.
So there's really no plan. So you got to have a plan for passive income. And so Rich Dad, Poor Dad he's one of the first guys that I read. We were like, wow, because it gets you in the mindset of like, okay, so how do I retire and how much do I need to retire? Is it and then what is the definition of wealth and what do I need to retire? So if I had asked you what is your definition of wealth, he would say, and I repeat him, he said, it's not how much money you have in the bank, or it's not how much money, or even how much money you make a year. You could have a job where you're making $500,000 a year, but if you're spending it and you have taxes and all that and you have nothing, then the question is, how long, if you quit your job, how long can you go without having to work? That's the definition of wealth, right? Or that's one definition of wealth that I try to live by. So granted, if you have passive income like I do with my apartment complexes and stuff, there's always management. I mean, even if you had all your money in the bank or in stocks, you still have, someone's got to manage that. You got to check on that. You're dumb if you're not checking on it. And so there's still you manage your people, right?
Mm-hmm.
So if I answered that question, so if I would say Rich Dad, Poor Dad, that would be the first one for like someone who doesn't even have a concept of what it means to start building wealth. He was the first guy, and I think continues to do that. There's lots of people now.
Yeah.
If you're in the game and you want to go to the next level, my new favorite book is let's see, what is that book? Hold on, it's about syndication.
Got it.
You can ask me that.
There's a few of them. Yeah. I know. It's a red book.
Best ever apartment syndication book. Yeah, by Joe Farrell.
Here you go. Yeah. Like it's a Bible. People call it syndication Bible. So it's definitely. I got the book. It's sitting there. Hold on. We're not gonna cut it out. I got the book. Do I have it? Hold on. Yes, I do have it. So here we go. That's the book.
Yeah.
That's the book. I had to ship it all the way from the States because we don't have it here and it's a big book. So, but this is basically a 4-part system to raising money and buying an apartment. Like any of you who are watching this and want to get into multifamily, learn about everything about syndication, like this is the book. This is must have. If you don't have it, you're losing out. So awesome. Again, if we're going to transition to multifamily syndication parts, again, we spoke about, briefly that we are in the top of the market, kind of. Again, nobody has a crystal ball to know if we're not, when the market is going to turn. But the question is it the right time by looking, again, all these new syndicators popping up like every day, and maybe it's harder to find deals, capital is more available, no deals. Should I go and start, looking and just be involved into syndication right now, or maybe I should wait it out? What's your thoughts on that?
No, I think you start now, but you be very careful. It's kind of like, in a lot of these investment books that you read about, it's like, if you want to learn about investing, start looking at deals, and don't ever do your first deal. Look at 100 deals, and my new favorite term is, reverse engineering. So like, when you, figure out, sit down and write down your goals. And if you said, man, one day I'd love to own a 10-plex, if you don't own anything. Okay, so what does that take? What's the financing that's required? What markets do you want to start looking at? And then you start, the easiest ones is the market you're in, because then that you're probably going to know that market a lot better. Like where you live, like what bars people like to go to, what restaurants people like to go to. Is there a college there? Is there a university? Is the rental market tight? Or do you see signs everywhere that says, no deposit, move in with no deposit? That's probably not a market I want to invest in. And also people confuse you know, like, oh, the real estate market's going up, the value of houses is going up. Well, that may or may not parallel apartments. And like I said, you know, we had a huge crash in real estate, and it did affect a lot of multifamily markets, but it didn't affect our market, and it didn't affect a lot of different markets. So you need to really study that. And one thing that I've done as I've spread out, and I haven't, you know, I've owned stuff outside of my state. I don't have anything I own outside my state right now, but even outside of my town, 30 miles away, it's going to be different, right? Every town there's going to have a different rental market. So when you start to look in those things, start asking questions. So like I'll ask, I was looking at a place up in Gunnison, and I asked them, I said, so how did this apartment complex fare during the real estate crash? And their response was like, oh, wow, like we went down to 25% vacancy, and we had to drop the rents $100 across the board. And I'm like, see ya. But if you talk to someone in California, say like a town of Salinas or something like that, say, how did that fare for you? You know, I've talked to people, and they're like, we really didn't feel it. We had vacancies went up a little bit. Maybe it's a little bit longer sometimes to find a good tenant or someone that, you know, because it also affected jobs. So that's going to affect your quality of tenants, right?
Yeah.
But for the most part, it was a little blip on their screen, and then they had cash to start looking for other apartments that were available because people are too leveraged. So there are a lot of factors. So yeah, I've been in 30 years, and I think the smartest thing that I could say, or anyone could admit, is I don't know everything. And so and so yeah, you really want to look at your market. But I think it's way better to invest in something, and then you want to invest in the income rather than the appreciation, or you know, we talk the speculation. So I don't call speculation investing, because it's kind of like going to, I mean, you can go to Vegas and speculate.
Yeah.
You know, hey, I think I'm going to win this hand.
Definitely. I spoke with this woman. You probably know her. She's very well known in syndication space, and Holly Williams. Holly
Yes.
Williams, sorry.
Yeah.
Yeah. So we had a recently interview with her as well, and she said wishing is not a strategy. So
Yeah.
basically, were you looking to invest into, you know, for appreciation, or you betting against, you know, whatever in the stock market? Like, that's wishing. That's crossing your fingers and saying, maybe, God, please, that's going to change. Like, this is not a strategy. Like, you need to invest in something that is, you know, recession proof, that provides you cash flow. And that's why a lot of people moving towards multifamily, because you're buying an existing business.
Yeah.
Of course, you have to be careful about the markets that you're buying in, and you have to, of course, do a lot of due diligence. There is a lot of moving pieces, but you know, it's a existing business. You don't play it on appreciation. You play it on a value add, on increasing NOI, and that's how you're going to increase the value of it. So, you know.
And I think, sorry.
No, go ahead.
I think one of the best things going forward, because you know, I'm 50 now, and I'm not gonna, you know, I guess I could still make a mistake, but that's not my plan. There's no wishing on my part. There's no betting on my part. I'm doing what I know, and I'm sticking to that specifically, right?
Yeah.
Because people bring me a lot of deals, and I'm like, well, that looks like it could be good. Good luck. But unless I know, I have no reason to. I actually don't need to make any more money, except that, you know, I want to, but I don't need it. So yeah, I'm only going to do the spectacular deals. Yeah. And then the best play that I've done this, we did this in the past at a certain level, but this is a new thing. It was newer to me in the last 5 years, that I've gotten a non-recourse loan in the past, but you know, this strategy is what I've been doing with my properties is so, you know, if you look for property, and so say the cap rate is 6%, 5% in your market. So you're going to buy something, it's always going to be at whatever the cap rate is, right? Because that's whatever people are willing to pay for something in that area. But you want to buy it on a pro forma that's going to be 2 to 3% higher cap rate, if you follow me.
Mm-hmm.
So I may buy something at 5% cap rate, but there's a value that I can add that the existing sellers don't see or don't want to, or they're tired or so on. They don't have the expertise, or the expenses are too high. So I'm only getting into properties where we can go in and so the 27 units I'm looking at right now, and well, I'm not going to talk about that because maybe the sell. I don't want to. Anyways, I just don't want people. I'll talk about a different deal. So there's a 48 unit apartment complex we bought 2 years ago, and we were able to go in, make some changes, simple stuff, paint, carpet, tile, but it wasn't so much what we to do to the property. It was that it was under market. It was just under market. The people that owned it, the guy who built the property 20 years ago, he had passed away. It had gone to his daughter, and she's actually in England. She's in the UK. She's an international attorney, and she didn't either care, or obviously she didn't care enough about it, or didn't see the value. She just let the managers back here take care of it, and they're good people, older couple, but their value to the property was, we want to have the best property in our area for the cheapest price. So, and then they made sure they got paid very, very well as the manager. So they were in charge. They got paid really well. They had a sense of pride because they were of what their value was. But the owner wasn't making any money. So, and they kept the rents lower than what the market is. So bottom line, we could come in and raise it from $30,000 a month to $50,000 a month, which correlates to about $2 million increase in the property value.
Mm-hmm.
So I went in with, I had a larger investor. We put in $1 million cash. Within 12 months, we were able to get it reappraised at 6. We bought it at 4.2. We're not going to sell. No, that was a slip, a Freudian slip. We got it reappraised at 6.2 million. So then you can go and get 70 to 80% of that value back. And so we were able to do that. We actually got our $1 million back out of it. So we got our seed money back out of it, right? And then now we don't have any money in the property, and it's non-recourse, which non-recourse means if the bank or if the property goes sideways and we can't make the mortgage, they don't come after us personally. They just take the property back.
Yeah.
And so what that does is so if there was some sort of problem in the market, and say that apartment complex goes under, they're not coming after us personally, and it doesn't affect my other investments, right?
Yep.
So
And
it'd be a sad day, it'd be stressful, but it wouldn't take me down, and it wouldn't take my investors down.
Yeah, because we structure it as a separate LLC. And what's financing did you use for this particular deal? How did you structure the financing?
It's non-recourse. And
so what was it? The Freddie Mae, Freddie Mae? Who was
Freddie
it?
Mac.
Okay.
And that's a loan. That's a thing that's provided to us here in America.
Yeah.
Which is amazing. And it may not be forever, but it's like, wow, if you can find these properties, which takes a lot of effort, which takes a lot of energy, which takes a lot of expertise in specific markets, but if you can find those, you can do the value add, which I do, and I'm doing.
Yeah.
And then so my investors were really happy because they were getting so when you first start, you're not making a huge, I was paying my investors 6 to 8% return on their money. But then once we refinance, I give them 110% of their money back, right? So in about an 18-month period, or over that time frame, 12 to 18 months, it's like 137% ROI.
Mm-hmm.
So at that point, you have all your money back, and then they still have an equity position in there where they'll continue to get monthly income from now to the eternity, as long as that property's available, or we sell, then they would get their share back. And we're all in a position where our money's out of it, and when we're protected, we have LLCs, and then the non-recourse money. And then the beautiful part about this non-recourse financing, it's not easy to get. They won't do anywhere. They won't do any market. It has to be over $1 million for them to even look at it. But if you can get it, and then the terms are beautiful. Because
Yeah.
typically around here, if I go to my local market, and a lot of times I do when I'm first buying it, it's going to be, 5.5%, 20 to 25-year amortization.
Hmm.
But with the Freddie Mac non-recourse financing right now, they're at about 3% interest
Wow.
at a 30-year amortization.
Money for
So,
free.
yeah. And so we basically borrowed out all our money and a little bit more. Uh, and our payment is the same. It's just a little bit higher. And so we're still making bank on this property, and then rents continue to rise because inflation and cost of living continues to rise. Which that's a whole nother thing as far as like when you look at like investing in real estate, which is leveraged. That's the beauty of it, and because it's appreciating faster than uh, well, it's appreciating faster than what am I trying to say? Anyways, that it's appreciating faster than the cost of living is what I'm trying to say.
Yeah. So
Uh,
again, it's no wonder that you have all this capital coming into the States. Like
yeah,
people don't get confused because of the flag here. I'm not from there. But
yeah,
like
yeah,
I know so many business people that I talk with, and like all over the place. Like Europe, Asia. It could be anywhere,
yeah,
like Australia. Like I spoke with this guy a couple of years ago. He's an investor in Australia. He buys this distressed properties because again, or like he's in New Zealand particularly, and
yeah.
because again, there's a lot of earthquakes. So he buys those properties that were damaged by the earthquakes, and he's flipping them. But he's like dreaming about multifamily. He's like, I want to be invested actively, passively. He sent me the deal previously. I was like, man, these guys are syndicating the deal, and we spoke about it. But
Right,
like everybody's looking at the States, and because of what you just said, the leverage, like everybody wants to protect their own capital, like go in the deals with the sophisticated investors like yourself, who've been in
right.
business long enough, like 30 years is a very long time,
Yeah.
so again, and just protect their own wealth and grow the wealth. So
Yeah.
definitely it does make sense, so
And the
so
other great thing about that is, I've made 350, 500,000 as a real estate agent, and the tax, I mean, I loved being in real estate sales, and I love the business and the people you meet, and all my buyers and sellers, or the buyers and sellers I had from years ago have become investors and partners.
mhm.
So it's great networking, and access to the local MLS and networking. That's how I find my deals, with the networks and the relationships I have. However, as an independent contractor, it's the worst way to make money. And if you're living in California right now, I mean, you're paying more than 50% in taxes and
A
earned
lot of a
income.
lot of companies are moving from California. I mean, you spoke
From
about,
Puerto Rico.
California didn't felt, as I said, a lot of, the vacancy didn't go up a lot, and it's probably because they couldn't get those people move out because it's a tenant friendly state.
Yeah.
So they
But
probably
yeah,
want them to go. They
an
probably want
apartment.
them to go. They were like, leave, but you cannot go because it's a tenant friendly. So, but like because I dreamt about California myself personally, but then I came across people like yourself and I was start talking and they told me all these details like California is, so I was like, okay, maybe I need to go and do more my due diligence somewhere like in the South area. Cause that's a lot of that's where the baby boomers moving South and everybody's
Yeah.
like anything South, like Georgia, South Carolina,
Yeah,
Florida,
I heard good things
Arizona,
about
like
North Carolina, Raleigh, and
yeah, yeah, yeah.
yeah.
So awesome. So what about some risks? Well, I don't want to expand on that, but for the people who are looking maybe to invest, actively, passively, can you talk? Is there any risks when you invest into these type of multifamily deals?
There's always risks in anything you do, but in my personal opinion, in my experience with what I know, there's a lot less risk. So, uh, I'd rather do a handful of deals in my life, and really good ones. Then that's the problem compared to like fix and flips, or even selling things. Once you sell it, that income stops, and
Hmm.
so you have to go find another deal, and you have to find that good deal. And finding deals is good deals is it's a full-time job. So when you can find those I call them once in a lifetime deals that I want to do 100 times, you want to take those and take advantage of it. So what I wanted to finish my thought, and that was on taxes. That's the beauty of apartments, is you pay a lot less tax because it's passive income. And there's a lot more depreciation and stuff like that. Does it make sense? No, but that's our tax code. You think if you had to earn your income, you'd pay less. If you had passive income, you should pay more, but it's reverse because the tax code is written by the wealthy. So
That's what I wanted to say.
Yeah. So, so the risks is kind of like what we've been talking about, is getting into a bad market. You know, one thing that everyone talks about, and I totally agree, look at the population.
If you're going to be investing passively, you know, do your due diligence personally. Make sure that you're investing with the right operator, again, who had enough experience. They have, you know, experienced assets under management, currently active. So, you know, that's all. So moving on and talking, maybe you can share some of your experience, you know, from acquiring these 209 units and going now under contract with another part. So what did you learn from it? I mean, having all this experience and being active in multifamily, can you share, like, what does it take for somebody who is looking to invest into the deals themselves?
Well, you need to treat it like a full-time job and have it be a priority. But it depends, you know, like we were discussing, if you want to be strictly passive, you know, find a good syndication. I mean, I highly recommend that. I mean, I would really want to know those people, or get to know them, or follow them for a while, or, you know, just look at their background and be confident that they know what they're doing. But what I've learned from it is, you know, so many people, because I'm always putting the word out there that, hey, we are looking to we're serious investors. You know, I have, you know, $1 million to $20 million in capital available to me. We can buy property, but this is what we want, you know. And then I have realtors post back, if I put it on Facebook groups, whatever, then they go, yeah, right, if I could find that, then I'd buy it too, which, yeah, I get that. But here's what I've learned is those deals are still out there. So you just have to have the experience and the network. And what I'm doing now is, because what I've done in the past is I've just, when it came across my path, I jumped on it. But now I'm actively looking to build my network, which I have, and I'm continuing to build, to look for those special deals, because that's the only thing I want to invest in. You know, if it's a turnkey apartment complex, there's some stuff out there. If it's in a solid area, like I'll tell you one, I have a fellow investor who's, you know, he definitely has tech what I do, but he doesn't. It's all private investors for what he does. But he told me Jackson Hole right now, Jackson Hole, Wyoming, which is the first place my brother and I went and decided, hey, we want to move out west. But that market, from what I hear, is amazing. Like, you can pretty much buy anything and it's going to make money. But, you know, don't take my word for it. Do your own due diligence. But if it was someplace like that, I would, you know, because I want to see who the renters are, and what is the rent. If the rent has been consistently going up the last 20 years, then I'm interested, you know. But you're gonna, you know, those are like 3 caps up there. So and the other thing that I've learned is you can still get money. And the other thing, people, because I do lunch and learns with local realtors and also around the surrounding area, teaching real estate agents how to leverage their commission to buy a real estate property with no money down. And people scoff at me and say, you can't do that anymore with today's lending restrictions, but I've done it. So it's possible. And I did it with bad credit and no money. So it's possible. So
it's definitely possible, you know, like, because every time you're going to find one question that I will ask you, not like after a few more questions, but like when I ask this question to the people, they're like, oh, like, I'm looking to get this and that, you know, this year. And like, I'm like, but maybe it will work for us. I'm like, look, man, it's all the perspective that you have on things. So it's all come down to the creativity, you know? So if you're creative enough, you can find how to go through all these challenges and how to find the ways how to get the deals. I mean, there's people already doing that. I mean, people are actually looking to fly to Mars,
Yeah.
and people are saying, oh, I cannot get the money for the deals, like, or I cannot find the deals. Like, you're on the
Yeah.
ground, like people are trying to go there, like where's no air and do something.
Yeah.
So, like, what's not possible? I mean, like, let's be non-realistic for a little bit, and let's talk about, because you mentioned you want to people install this mindset of saying, like, think big, and, like,
Right.
but once people start thinking big, they will stop saying about, oh, nobody's lending, there's no deals, because it's all comes down to creativity, relationships. Another
Yeah.
key point that you mentioned, you need relationships with everybody, like with potential passive investors, with brokers, with lenders, like
My first little deal that got me back in the game was just a 16 unit place. And I went to 12 banks, and I heard
2:00.
I heard 11 no's. And then the bank was like, well, we can only do this and this. But I just kept pounding, and we made it happen. And the seller, I found sellers that they were tired. They'd owned it 31 years and they're ready to retire. And anyways, everything can line up. You just got to keep pushing. I heard someone say the other day, and I thought that's so true. All your dreams and how to do it is written in a book somewhere.
yeah.
All you have to do, you just got to read that book. There's the
could
information.
be that book. Could be that book.
Yeah. Yeah. You'll definitely learn something from that. So yeah, it's a fun time to be alive. And the other thing I've learned is, I've been going too slow, so on one hand, you want to be patient. There's always another deal out there.
Love the honesty.
But you gotta, it's like, hey man, and that's the cool part. As once you gain experience as you are, and everyone, once you get to that place, I think for me, it was like when I was 40, I realized, hey, I think I know what the heck I'm doing. You just have to have that confidence to pull the trigger. But, even though I went through, 10 hard years, or I can take that knowledge at age 40, and then I can get it all back really fast, and then some. So I wish when I was younger, I went fast. I was just, taking my time, and you think you have time, but time is the only thing that,
and there's no time. Yeah, exactly. Because people, that's what the time issue that people have. It's ridiculous now. When you look at it, like, oh, I have no time, I have no time, I have no time, and like, boom, like you have no time. You're 70, like that's it. So what do you think you will have time? I mean, it's only 24 hours. Like everybody has 24 hours. Jeff Bezos, the richest man on the planet, he has 24 hours, and he's dealing with those 24 hours very efficient.
And he's only 3 years older than me.
So
yeah, look at what he's done in 53 years. I've done it.
Look, I love the story. Like there's a lot of people hating the man, like Grant Cardone.
Yeah.
Like
I was quoting him.
Man, look, like he's been a drug addict, like at the age, like for 9-10 years. And now he's he's a billionaire. Well, in assets that he's managing, like flying private, like living all this life, people watching from far, like, oh my God, like the guy, like I hate him and he's cocky. Man, like he was a drug addict, like he was in the bottom, like really bottom. If you're looking this on a screen right now through the computer and eating your sandwich and you're living in the home, you have the lights on, like you have, and you're saying like, I'm bad, like try to be a drug addict for 10 years. So that's a bottom. That's a bottom. And come out from that end to become this is amazing. So again, because these people decide like, I need to be in control of my time. I need to make some decisions. I need to work through some stuff. And it took them years. It didn't happen like, but they didn't say, I don't have time. They made time. Yeah. So it's all comes down to the mindset. Like every time, like I spoke with Holly, before, as I mentioned, and we talked, like she manages, with partners. She told me, don't use the word own. She said, I manage with my partner. So she manages with thousands of units, like 4,500, crazy amount of numbers. But she talked about the mindset more than the real estate. Because everything that you do, like in a business, like if you're running the business, you have to understand, like it's the mindset that you have. The reason, because you are in this situation, you're not able to get the deals or whatever, like blaming the market, the people, the brokers, whatever, it's the mindset. So
I think those people that have that mindset, they may never actually get there. And if you don't change your mindset, if you think you can't find any more deals, then guess what? You're not going to find deals.
yeah.
So
Definitely. So I need to work on my mindset. Everybody needs to work on something. So definitely. So, okay. Talking about back to real estate from mindset, about multifamily property. So we talked about some risks that are involved. What about people who are looking to get involved into multifamily, for instance, and they're looking to get a mentor? What do you think? Is that an option for people when they're starting out?
oh yeah. And that's one of those mindsets. You know, I've paid just recently. I've paid $10,000 to get some mentoring and stuff over the last 18 months. And what I learned, is $5,000 a pop. I went to a conference, and then I also did a coaching event, where it's a daily coaching for a while, and that's the only reason I have these 27 units under contract. So you can say like, well, that's stupid. You spent 10 grand, but guess what? This deal that's 27 units, I'm going to make $1 million on it.
Mm. Yep.
Yeah.
So you
Well,
definitely like,
worth the investment. What's the ROI on that?
yeah,
And
yeah.
and so yeah, from what I learned and what I learned from for me, the mentorship I was learning is deal flow, like how to get the deals to you, because I know how to find it. I know what a good deal looks like, but as we know, they're hard to find.
Mm-hmm.
So how do you find? And for me as a real estate agent, it's beautiful because if I can find an off-market deal in my market, in my area where I'm licensed, now I can leverage my commission. And that's my little secret, which some realtors know. And if you're a realtor and you go buy your own house, you're going to use your commission. I hope so, to to put it down as your down payment. But if I can get in front of the seller and I can find out what their bottom line is, then, and if there's room in the price as far as appraised value, I can build in. The deal I did last year, it was a $6.4 million deal. I had a 10% commission built into that. And I personally don't want to take that as a tax event, as a commission. I want to roll that into ownership, which I did.
Mm.
And then I end up having ownership with so you think about what would it take to come up with $600,000 to invest in a property. And that would take a lot of time, where you have to pay taxes, you have to save it in your bank, you have to spend less how many years would most people, it might be a whole career. Most people say that, or even some people. But with your real estate license, you can leverage your commission. If I can find the deal, I can actually create a commissionable event, which ends up being a non-taxable event, because when the deal closes, I get zero commission, but I have a 40% ownership or whatever it might be. So it's a way to use leverage. If you're tracking with me, we could talk about that another time.
Yeah.
But there's all kinds of cool stuff. Now I forget what we were talking about.
Yeah. No, you mentioned the mentorships. That's where we started
Yeah.
off. Basically, we ended up where we supposed to, because you just said
Deal
like
flow.
that. Yeah, that's how we got the deal under your belt.
My
Like,
brother was my mentor to start with, and
yeah,
he still is in a lot of ways, because he's been
yeah.
very successful.
Yeah, definitely. Like that. That's why I love doing, the show and talking with people, like yourself, and because again, as I mentioned to you before, everybody has their own stories, and most of the time, stories are more impactful than just whatever, do this and that. Because I'll
Right.
learn more from the stories, that people told me than, oh, just do this. Of course, you need some really good strategies, and that's why you pay for those mentorships and, those events that you go, like, trainings, 1-2 day trainings, because you just dive deep into the strategy. But the stories are just so powerful. So, I love that sharing those. So, okay. So what about the 2020? Again, I told you about that question. I'm going to ask you that question as I ask most of the people. And they sometimes get confused with it. But can you share your goals for this year, what you're trying to accomplish business
Well,
wise?
yeah, yeah, for sure. I think what I'm really trying to do is shore up my existing team, because I have a real dynamic team that I've created to do just for the 209 units. And my from from day one, well, since I bought the 48 units, I had the 16 and the 48, and then in the purchase of the 145 units, that's when I realized, hey, I have a real economy of scale, and not only even on a local level, but that's what I'm building as far as like what that looks like going forward. Because you got to have a management team, right? So there's got to be someone in charge of operations, and then there's got to be someone as far as like deal flow and looking at deals. So basically, I'm gonna tighten up this team so that we can move forward and go national. So
That's awesome.
that and that leads to syndication, because I and then I need to have deal flow. So increasing deal flow, tightening up my team, and doing my first syndication, which I've done. When I say I have lots of partners and I have lots of investors, but I have people that I don't know that are say, "Hey, can I put money with you?"
Yeah.
And you have to be. I have to be careful. We all have to be careful, because there's certain rules in the U.S. As far as with the SEC and that sort of thing. They have to either be an accredited investor, or you have to have a relationship with them. You don't
No,
have to have a
particularly
lot of. Huh?
if I'm from Europe, I don't have to be accredited.
Is that right?
Yeah, they're not gonna look at it. Of course, like I
Well,
think what it
even
says, I have to be, like sophisticated or something. I have to create a separate entity in the States and just invest through the entity, through LLC.
yeah. Well, and that's great. I would still say one of the things I'm developing. We're fine tuning our communication with our investors, because I want people to know who we are, what we're doing, and why, and trust us. I mean, you got to have
Yeah.
trust,
Yeah.
and then just to open communication as far as what's going on with our property. And I'd rather, so we've gotten really good at having our monthly reports that shows what we're doing, and so I don't have to wait for you to ask me what the question is. We're giving it to you every month, and
Yeah.
then there's going to be a few questions from there. But I want people, I want people to come along for the ride, because it's been such a benefit to me. When you get to a place when you have passive income, if you start whatever that level is, for me, getting back into the game, if I could I remember thinking, what? Okay, I know what I need to do. I need to have $35,000 on an annual basis, and then I can pay for my house, food, cars, blah blah blah. And then there's a certain level of freedom where you don't have to worry anymore about those things. And then you go to the next level where it's like, okay, now I don't really have to worry about my bills, but vacation, I still have to come up with that and so on. But it's like different levels of financial freedom
Yeah.
actually takes us to the place where we can see our real potential. And I have so many friends and so many people I would love to see that happen with them. I hear you meet with people, have coffee, you hear about their dreams and what they want to do, and then they're bound by their job, which jobs are great, man. That's what creates things. And not everybody, and I'll say this, not everybody's built to be an investor. That's just the way it is.
Yep.
But even then, you need to be thinking about the future. So
Definitely, because technology, cheaper labor, like in the East, companies moving, they're trying to lower the costs, and a lot of workforce are going there. I mean, everything, technology is changing a lot of workforce. So you made a good point. You need to look ahead at the trends, what is going on, what Bezos is going to do next, what Zuck is going to do like, just follow and just make sure that you're prepared, like having that freedom. Because
yeah,
again, you mentioned that, like, I think if I would get $1 million a month, I wouldn't have that freedom, because I would be scared, like what I'm going to do with the money now, because there's two levels of
yeah,
scarcity: not enough money, too much money. And too much money can be a problem, but it's a good problem
oh
to
yeah,
have.
it can be a problem. But that's
Yeah.
why it's kind of like I've done disaster relief, and I'm on the board with the Crisis Response International. But one of the things when we do training is you talk about what would happen in this disaster, right? So it's
Mhm.
like, so when you do training, so like if you're in any kind of disaster where something happens, most people, there's fight or flight, but most people freeze, right?
Mhm.
So, but what you want to do is develop a parking space in your brain. So it's like, okay, at least your brain will know where to go when this happens. It's the
Mhm.
same with investing, and it's the same with money. So it's like if all of a sudden you're like, I'm just going to make money, make money, make money, but then you didn't ever think about, well, what are you going to do when you have $100,000 a month? Most of us, we go, well, man, if I was rich, I would go down to Tahiti and drink margaritas every day on the beach. But if you really think about that, that's not sustainable.
Yeah.
I mean, it's like, well, you're going to die as an alcoholic. And then, or boredom, I mean, like how many days can you really do that? It's fun to do for a few days, but you know, I've had the opportunity, we spend some time in, we'll go to Hawaii typically for a month a year out of the year. And then my wife and we've enjoyed like spending longer times in places. But I remember the first time we did that, I couldn't believe how much I thought I was resting, but you get 3 weeks in a place and you realize, wow, I didn't realize how wound up I was. So there's some really cool things there, but thinking about that, what would you do if you didn't have to do anything?
Mhm.
And I was talking with a guy, he makes $130,000 a year $130,000 a month passive income. And he's actually really challenged by that, because he's so smart, and he likes to, go to the next, the next level, next challenge. So it can also be a dangerous place, where if you can have what you want as much as you want when you want it, you want to plan ahead for not, if you have addictive personalities, which a lot of us do, that, OCD can make you wealthy, but it also can kill you.
Yeah.
So
Yeah.
yeah, it's just balance. You got to have that balance in your life. But
Oh
like
yeah.
you were saying, I think that's a good. A lot of people don't want to think about it because it's too painful, But like I don't have any money, and so it's like, well, what are you going to do when you retire? Well, they're not going to retire.
Yeah. 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 It's
Yeah,
like work, yeah, work is a good thing. Work is definitely, I mean, we've been blessed because I think you mentioned, laying on a beach and drinking margaritas. I met so many people that you just, mentioned like that who has that mentality. And I think work is great. But again, at the same time, you don't want to work probably all your life. Still, I wouldn't like to be on a beach because I think having that purpose, working and moving towards bigger purpose is very powerful thing.
yeah.
So,
Amen.
you're definitely going to find something like, look, there's so many problems going on in the world. Like, you want a purpose? Go and help out people in China. Like, you saw the fires in Australia, go and help out these people. Like,
Yeah.
but
Well,
you need money. You need money. Like, you cannot feed people from an empty plate. Like, you need money to do these things. You want to build
right.
houses for whatever, people in a third world country, you need money.
Yeah,
So,
I like to, like I mentioned, I like going with doing disaster relief, and
yeah.
I love, I go on missions, with our church and stuff. Um, but I
Awesome.
was thinking about that because I was just in Nepal for a month. I shouldn't say I was a mission trip because that's illegal. I was on a tourist
You're going to
vacation.
cut this out.
um, they don't have as many cameras as China, so it's not as big a deal. But anyways, but I was thinking about that. It's enjoyable for me, but if you really want to make an impact, how cool would it be to send? And I could go once a year, but what if I could send 100 people a year?
Mm.
For it doesn't have to be religious or whatever is on your heart and whatever you want to impact society and the planet. Yeah, and I was going to say too, like for you, since you're being from Ireland, being on the beach is probably a death wish, right? With that sun. So
There is no
you
sun.
need to have
I will I will be
some
on a
lotion.
beach. I will be on a beach and with an umbrella because it's raining
Yeah,
24/7.
yeah,
Yeah.
yeah.
No,
That's,
it's not what
yeah.
I want, definitely. So
Well, yeah, it's much more enjoyable to have vision. I
yeah,
think it says that in some book somewhere. Without vision, people perish. So
great book. It's a great book. Yeah. Definitely.
Yeah.
So yeah, it's awesome. I love the vision that you have for 2020. You know, it feels like you're building this up, you know, all these connections. And again, you know, that's what it takes, because we live in a world where there's people. And if we want to build something up, we need people to do that. But at the same time, as you mentioned, you know, having this, you know, doing all the missions currently. And I think you have the mindset where you just want to help other people out, you know, help to build them that wealth that you're, you know,
Yeah.
doing currently. So it's a great thing, you know. So what about one thing before we're going to move on to the last thing?
I was going to say one more thing.
Sure.
So yeah, that was a big part of it for me, because you know I was pretty tired from survival, and then when I got to a place where it's like, well, I don't have to worry about, you know, paying my bills anymore. But it was really with my kids where I realized, hey, I want to, grow in the wealth that would go to my kids. So this guy Michael Reese, who is with EXP, I don't know if you've heard of him. He has a podcast, and he had this guy on there. I forget what his name is. Called The Hard Closer. I don't know if he's an economist or not, but it was inspiring to hear him talk, because he was talking about whether you like Trump or not, he's implementing these tax incentives in America right now that could potentially grow, build an economy that's going to be for 50 years, like this booming economy, right? And especially over the main growth is going to be over the next 10 years. And especially this next year in 2020, it's important to be positioned, because how you are positioned now depends on how you're going to grow in the next 10 years. And so that was pretty exciting to hear that for 2020.
Yeah, yeah.
Um,
I think, you know, I like, I don't want to go political all here, because this is not the channel to do that, you know. But you know, I always had this opinion when I started to go into business. And I know, like, not everybody's gonna agree with me. Maybe you're not gonna agree with me, but you know, it doesn't change whoever's is in a government. That, you know, whoever's sitting on a podium, like, it's not gonna change my life, because the decisions that they make, they're making those decisions on a big scale as a country, as how to present the country, how to work the things, you know. But like,
yeah,
when it comes to this table that I'm sitting on, like, it's not gonna put the you know, food on my plate. Like, nothing is gonna happen. Like, I don't know who's like running the country now, but you know, maybe it changed, but the things didn't change, like in my economy, in my household. So you know what I mean? Like, you know, it doesn't matter. There's still people who are gonna be there, who is gonna suffer. They will be like working 24/7. They will be like still looking, you know, meeting the ends, like, all the time. Like, so that's why we need more people like yourself, who are, you know, having vehicles for people, because in this world, somehow we need money, you know, to do the things, to buy the things, to help other people. And we need vehicles, you know, just like multifamily, you know, that Joe Fearless talks about, that you talk about, you know, that gives those, you know, opportunities to have that passive income, to make those decisions. Like, what do you want to do? Do you want to travel? Do you want to impact some people? Do you want to, like, when you can make, you know, choices from that perspective, where you have freedom in here, it's
yeah.
so different world. So I love that.
There's some
So
great opportunities now, and there's some great opportunities coming. And I'm excited for you guys in the UK. Moving towards politics again, but I'm just excited with where you guys are.
oh,
So, and also just with real estate, just with the company I'm with, I know we're going to expand into the UK and this year, and so into the EU. So
wow, that's awesome.
there's actually some really good
UK is a
some really
UK.
good opportunity through EXP. Should
UK.
look at that.
Here you go. Here you go. We're gonna put some links down below for you guys who are looking to
Yeah,
become. Because I was an agent before, as I told you before, uh, and it's definitely somebody who's looking to get involved. And particularly, I'm gonna give you some links to connect with Garth, you know, personally, because you mentioned this thing where you basically can, you know, go into the deals without getting paid on the property. You mentioned something like that, basically
right. Well, those are tax
some
advantages.
some
What I'm
magic.
talking about here is I mentioned a little bit about, most people don't prepare for retirement, and especially if
Yeah.
you're an independent contractor, you're in commission based, you might be making a lot of money every year, but how are you going to retire? If you're used to six figures a year, just like $120,000, 3%, if you're just going to rely on, simple interest in a bank account or money market at 3%, you're going to need $4 million in the bank to have $120,000 a year. Or there's some really cool stuff with EXP where it's a new thing with the cloud brokerage, and where we're all the owners and there's no more franchises. It's the new Amazon of real estate, if you will, to where you actually get stock and you actually get passive income from recruiting, and then the education is phenomenal, and the collaboration. I mean, the collaboration I have with the multifamily and commercial real estate is amazing. That's actually what I was doing down in Mexico. There was a conference down there with EXP agents. But yeah, if anyone's interested in that, you know, not trying to be too salesy, but the fact that I love real estate agents, and I know we all have made the mistake. You wake up and you're 40 or 50 years old, and you haven't really, you realize, hey, I need 4 million, and I got 40,000 in my 401k.
Yeah.
So this is an avenue where you organically can create passive income. So
Love it.
anyway,
Love it. Love it. Love it. Definitely.
Just get a hold of me. So yeah.
we're gonna put some links up down below, so you can definitely, guys, can check it out. But before you're gonna put those links down below, we need to know what links do you have, like, so I want to ask you kind of from a selfish standpoint, because as I mentioned, I run a social media company and we work with real estate companies mainly. And I see this because when I come in, like either physically into the office and I present this offer, to the company, whatever, that's $300 million company, or just a brokerage in a corner, or I'm talking with somebody online, I see like that they don't have a social media presence, or just any presence, like the website and, just some basic stuff. So like, what is your greatest marketing tools that you're using for your business? Can you just give, some advice for people who are watching?
So when you're saying marketing, as far as like
anything like social media, or maybe some software tools that just helps your business on a day-to-day basis.
So in my business, I mean, there's the attraction part for investors, and then there's also, as far as just like the meat and potatoes of property management, that's just attracting tenants. So I haven't gone nationwide to attracting investors. I mean, I literally have 200 plus people that would like to invest with me, and that's kind of like the next. You could add that to my 2020 list. I don't really have a social media presence because I haven't had to with investing. As far as with our rentals and stuff, we have a website. We have one website here locally where it's just DurangoApartmentRentals.com. Pretty simple. Where everybody can go to and look at the different properties. They can apply online, and that's you've probably been in a few industries in your career. I have too. Man, there's all kinds of software these days. So we have property management software. All of we have unlimited amount of units we can put in there, and then it automatically, those automatically, and it could be like. Buildium is one of them. Rent Manager is one of them. I don't want to necessarily say one or the other. There's a lot of different ones. Check them out. Well, I will say I use Rent Manager, but I know a lot of them are really good. But what's so great about them is you can put everything in a funnel where the tenants contact us directly for maintenance issues, and then if when we're 30 days out and the apartment's going to be vacant, it begins to advertise on 12 different sites, like apartments.com, Zillow, Trulia. And so those are automatic marketing things that happen, and it's free. I mean, the software is not free, but that's included in the software. That's something we didn't have 20 years ago. And then, so it's like, use all that to your advantage. And then the other great thing is Facebook. I'll tell you right now, and if you work for Facebook, close your ears because I don't want you to charge me. But, I mean, we used to have the old days. We'd put it in the paper, and it would cost you, $180, $300 a week, just to run your ads. But I mean, we have Facebook Marketplace, and it's I mean, we get most of our clientele come through Facebook Marketplace, and it's all free. And then we can send them to our website. So, and then on our website, we just have it where you can apply online. So,
Yeah.
so that's just for the tenants, you know, so that's pretty easy. And that's something that's required for the business.
Mm.
But personally, you know, I just have an email and a cell phone for investors, you know, and that's all. But, you know, I've been in the business for 25 plus years. You know, I've been involved with real estate for 30 years. You know, I have a lot of people asking me,
Yeah.
but, so I'm not short of capital at the moment.
Yeah. Yeah.
Although that's what I'm doing, right. I want to build that database, even more so,
Yeah. Yeah.
because, I
'Cause-
want to start. We talked about reverse engineering. There's a deal there's a guy through EXP who, has a client who has 741 units in, San Francisco. That's
wow.
$1 billion portfolio.
I guess so. It's San Francisco. Yeah.
Yeah, that's $1 billion
Very expensive market.
portfolio. And so we're studying those, and if it's a worthwhile purchase. But just think about, those are fun things to think about, right? $1 billion deal. So we just need 250 million, as a down payment, and we already got 20 million. So you only need 2,500 people with $100,000 to make that deal happen. But,
My God, that's a. But San Francisco, I'm not sure about. Like, is people already but like buy? Because I know it's very expensive market. Like San Francisco, Boston, New York.
oh yeah, it's very
Yeah.
expensive.
Yeah.
Yeah, and we're looking at that, was just for fun to look at, but it's just, to make a point,
Yeah. Yeah. Yeah.
that I'm looking at bigger things. So, you know, I have approximately, you know, 20 million in capital available to me right now. Um, that would be on a case by case basis. So, I mean, some people
Yeah.
will like, well, I want to invest in that part of the country or whatever. So, but yeah, I don't have a link except my email and my phone number.
Yeah, yeah, yeah. Oh, that's no problem. Old school stuff. Like, because I remember back in the day, what you mentioned, like putting ads on a newspaper, running TV ads, or maybe for some companies that was too expensive. But just cold calling. There used to be a newspaper. It used to come out Wednesday. We used to go first in a press to collect it first because we want to be calling first. It was
Yeah,
ridiculous, man. It was just,
yeah,
like doing all these tasks, wasting time calling people like, hey, listen, I'm calling from blah, 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 are you looking to sell, and it's like, it was so much time and effort put into it. Of course, you're building the skills because when you get the phone skills up and you're like talking with people, that's the skills that you want to build. It doesn't matter if it's a technology age or something, you need to have those skills to be able to talk with people and put deals under the contract. And this is the skills that you still need. But it took so much time to get the deals, to sell the properties. It just, because now we can like do it remotely. Like you don't even have to see people. Like, is it all Facebook Market? Hey, do you want to sell? Yeah,
yeah,
I got something for you. So, that's awesome.
yeah.
That's awesome.
Things are changing quickly, and
Yeah,
they're
yeah,
to our advantage.
exactly. So I'm gonna put all the links down below. As always, you can find everything about Garth. Again, the website, email, phone number. So feel free to reach out to him. Again, about EXP Realtor. You talk about something, opening in London, probably in UK, an office
Yeah,
there. So, or about the
it's here.
experience, possibilities becoming a realtor again in the States, if you're looking to do that, and just maybe transitioning into multifamily. As I mentioned, there's some
Right.
magic things that Garth is doing in that space. But I really appreciate you, being here today, sharing the awesome knowledge. Man, it's 30 plus years, so I can sense that. I mean, you've been in a business long time. So I really appreciate when I have those people on and they just share the knowledge, the experience, and people can sense that, they feel that. So and again, you can contact them, ask the questions that you want. So and before we go, can you just mention something, the deals that you have coming up, like beside the 2027.
27 units.
Yeah, yeah, the people would be interesting, like investing with you. Like, what do you have going on? For people who would be like, oh, I want to be part of a Garth deals or something. So
Yeah, well, I would recommend, we'll have my email down there, and even my cell phone. You can text me or even call me. I'm happy to, talk on the phone. But, we got 27 units we're working on right now. There's 68 units that we haven't had under contract yet, but we're working on that deal.
mhm.
And then, there's another 72 unit deal that might be interesting. So we have a few things in the pipeline. So I would just recommend email me and say, hey, I'm interested. I had a guy just yesterday say, I got 65 grand. I have a 1031 exchange I need to do. So we would just send you some numbers, and real simply, what we offer our investors on most of our deals is a guaranteed 8% return. I guess you can't necessarily say guaranteed, but that's what we make happen is 8% return from day one. You give us your money. And then in 18 months is 110% return of your money. And then going forward, you wouldn't get an 8% return, but it'd be like a 3 to 4% return on the original principal, if that makes sense. Yep. But at that point, you're already 137% ROI, and then going forward forever, you're going to continue to get that passive income. Yeah. And then what we, let us prove to you what we can do, and then you could reinvest that money with us, and we just want to reduplicate that and duplicate that and duplicate that, and you could just use the same money
to create the wealth. So yeah, exactly.
You don't have to have $6 million. So in that scenario, if you did that, if you had $100,000 and you did, let's see if I can do the math right, but I won't be able to do the math right. But you heard me say earlier, like if you had $4 million at 3%, that's 100 grand. So you could take, a smaller number, say $100,000 or $50,000, and just redo those deals a few times over the next 10 years, and you'll be at that place of passive income. Yeah. And then also, if you're a real estate agent and you want to look at passive income, EXP, I mean, if you have no money and you're just doing deals, you're caught in the rat cage on the wheel. That's a beautiful way that they've done to create passive income. And then you can have that passive income invested in other things like multifamily. So yeah.
That's awesome. Again, like as we mentioned, there is nothing guaranteed, in this world. Like things do happen, and people have to, that's why you have to get educated, and that's why we, do this show, weekly, and that's why we have people like Garth, who sharing their experience, so you can learn more and just, doing your own due diligence and preparing yourself to move in, investing actively or passively. But, everything is definitely doable. Everything's possible. And, Garth is just proving that. Going through, the ups and downs, like having all this journey and continuing, growing his own wealth and helping all the people to do the same. Again, everything's possible, guys. So I just want to finish up with that note. So again, please like and subscribe to the channel. I appreciate you guys watching. Garth, been a true pleasure talking with you today. I appreciate the time that you spend. Man, I wish you all the best success in 2020. Magical number, guys, magical number. Do something magical this year. Explode your mindset, go and reach some people, build the connections, build the business, and build your life. Guys, I appreciate you watching. I'm going to see you in the next episode. Thanks.
All right.